Glenn Tompkins. I'm a senior instructor here at VectorVest. Been here now officially today. How about that? Officially today, I've made 15 years. 15 years working for VectorVest, which is different in today's atmosphere of people's longevity holding a position anywhere. But 15 years, and I've been blessed to be here for that a long amount of time. And like I said, I'm glad to be here. And I think that for me just emphasizes the fact that I am glad to be here. 15 years is a long time, and I've loved every minute of it. Well, not every minute, but for the most part, every other minute of it. How about that? That makes me half the time, but it's probably more than that even. All right, and 15 years using this software, it's made a difference in my life financially. And people always ask, well, if you're making so much money, why are you still working for VectorVest? Or are you a millionaire? Well, I enjoy working for VectorVest because I enjoy doing what I do. I think that it is a talent of mine that I have to connect with people, and I want to do that for as long as I possibly can. Number two, if I'm a millionaire or not, I will not confirm nor deny that. I will tell you that VectorVest has done extremely well for me. And why am I still here? Because again, I enjoy doing this. And I was set up, I'm about to turn 52 this month. I was set up already to retire by the age of 50. Why didn't I? Because there's only so much golf you can play, one. And number two, I really enjoy doing this. So if you're out there, chat in. Love to hear from you. I can't see the chat screen. Only Joey can. He'll let me know.
Mark Jones to Simplify.
Hoorah, Mark.
Congrats.
Say again?
Congrats.
Thank you very much for that. I appreciate it. I can't see the chat here, so I have to depend on Joey for that. And Joey, if he's in a bad mood, I can't see it all the way over there. It's far. That's why I wear glasses. All right? And if Joey's having a bad day, he could mess me up. So I'm in his hands. I'm like Jell-O in his hands. All right? And that sounds kind of weird, but VectorVest is the software that we're going to be using. It's a software that's been around since 1995. It's also been around a long time. It's a portfolio, it's a stock and portfolio management system. It's designed to help you to make better decisions in the market. With us now, we're in part 3 of our 4-part series of trading your plan, planning your trades, trading your plan. So the first one was about understanding the concept of planning your trades and trading your plan. Last week was part 2, where we specifically dealt with just market timing. All right, in a trading plan, you have to know when to buy, what to buy, when to sell. And last week, we concentrated on when to buy. Max and Mike, nice. Greetings from Fort Carson, Colorado. Airbnb, he wouldn't do that. I wouldn't do what? What did I do? What did I do? He said I wouldn't do it. But, man, I got new people chatting in today. Outstanding. And you know something? When you have a wife and husband team, if that's what that is, let me tell you something. Husbands, listen to your wives. Why? Because wives or women in general will make better traders than men. They do. And why is that? Because we as men were born with egos. We don't like to be wrong. So women are more apt to get out of a losing trade a lot quicker than a man will. So that study, and it was a study that was done to show that women are better traders than men specifically for that purpose, is that we have a hard time of letting go of something that we messed up in. Joey wouldn't mess you up. Yeah, he would.
No.
Yeah, you would. Say hi, Joey.
Hi.
Joey's my producer in the background. He sits here with me. He makes everything in the background look good. He makes me look good. All right? Sort of like Tresemme. Isn't that, if you don't look good, we don't look good. Was that Tresemme? That was something. That was another commercial. But yeah, Joey does make sure I look good in the background. And then we have, does Daniel have any part of this in the background? So Daniel's my super producer in the background. You never hear from him, but he's the big, heavy tech guy that makes all of this really happen. So I'm grateful to have the both of them as part of this team as well. All right, so last week we got into when to buy. Market timing is so important. You've got to have the right opportunity to know when it's okay to buy or not buy. So we talked about 5 of the 7 different market timing calls that we have. Now, today, we're going to step it up a little further. Now, today, as part of your trading plan, I'm going to show you excellent background. Love that. And Daniel, thank you for making that happen. That's a good background called Plan Your Trade, part 3 of 4. This week, we're specifically getting into showing you how to set up a long-only side of your trading plan. So we're going to take in the when to buy, the what to buy, and the when to sell. And we're going to, did you just make me move? You just made me slide over?
Moonwalked across.
Wow, I just moonwalked across the screen. Holy smokes. Hee, 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 whoo. All right. So we're going to put into practical application when to buy, what to buy, and when to sell on the long side of the market, which means just being bullish. And next week, we're going to combine that with a bearish strategy to take advantage of when to buy, what to buy, and when to sell on both the bullish or the uptrending market and on the bearish or downtrending market, putting that all together. So by the time this mini-series is done, you're going to have a better understanding of how to have a trading plan and put in place for both sides of the market. Let me explain something else. Stocks go down faster than they go up. So don't be afraid of downward trending markets. Everybody, when they get a downward market, they turn around and they get nervous, like, oh man, stocks go down faster than they go up. A downtrending market is probably the best place for you to make a lot of money in a lot faster time. But not everybody's comfortable selling stocks short. So what I'm going to try to incorporate are both a methodology of being able to short stocks, and I'm going to try to encompass or incorporate a means of playing the market to the downside with contra ETFs. Depends on how I can make it happen and how much time I have. I might try to make that happen. So next week is going to be the culmination of all 4, looking at setting up your trading system to the upside and the downside. But today, part 3, we're going to be talking about building a trading system for just the upside of the market. All right? With all of that being said, are you guys ready? Let me know in the room that you're ready. I want to make sure that I'm not leaving anybody behind. And again, I love this background. I want to make sure I'm not leaving anybody behind. All right? While you're answering the question, I know there's a delay. As long as while you're answering the question, I'm going to take a little drink of water. Hold on. Today, I am not going to start.
Speed is ready.
Thank you. I'm not going to start with the market timing graph today. I'm probably going to get, what?
Put your mouse up. It was down here.
Oh, I'm probably going to go straight into our market timing. I guess I'm going to do the market timing graph. All right, we're going to start with the market timing graph. That probably is the best way to go because now we've got to determine if it's the right time to buy stocks or not. So last week, you all remember, I don't want that. Last week, we all remember that we talked about 5 of the 7 different market timing signals. Real quick, starting from the fastest one, primary wave, and I'm going to point out this bottom. Market bottom, that's where the market stopped going, where the market stopped going down and started going up. The fastest timing signal we have is the primary wave that you see, primary wave, which looks at the week-over-week movement of the VectorVest composite. It got us an up call coming off of the bottom on 12/28, 4 days off of the bottom. The bottom is on 12/24. The fastest signal got us in at 12/28. Let's speed that up a little bit. Let's go to the DEW. Actually, no, I don't want that one first. I want the green light buyer. That one got us in a little later than 12/28, got us in at 1.4, still very close to the bottom. The faster the timing signal, the faster the entry. Remember, right now we're trying to pinpoint when to buy. In our trading system, we're trying to pinpoint when to buy. Depending on how fast of a trader you are, will determine which one of these signals you want to use. Let's slow this down just a little bit more. Go from the green light buyer to the DEW. Still got us in to take advantage of this nice uptrend in the market, but it didn't signal until 111. So we had 1224, or 1224 was the low. We had 1228, which was the primary wave. Then we had primary wave was 1228. The green light buyer was 1.4. All right, so the second one was 1.4. And then we got to the DEW. That got us in at 111. All right, and the slowest, most conservative timing signal was the confirmed call, and that got us in on 118. So 4 different dates to get us in close to that bottom. The faster the timing signal, the quicker you got in, but the faster the timing signal, the more susceptible to whipsaws you're going to be. All right, so there we go, the slowest, most conservative call. And that's the signal that I'm going to use for this back test that we're going to do, for this testing that we're going to do. Why? Because it's the slowest, most conservative, and you know something? No matter if you got in earlier or later, this is a good middle-of-the-road timing signal to get you in to still take advantage of the uptrend in the market. And this call has the most confirmation behind it. Because it's so slow, it's got the most confirmation behind getting into the market. That is the market timing signal I'm going to use, but the process that I'm going to take you through can be used with any of the market timing signals that there are. All I want you to gather from this presentation is that this is a process for you now to start to build a trading plan. Hopefully everybody understands that. Before the questions come up, well, can you do it with the primary wave? Can you do it with the green light buyer? Can you do it with the DEW? The answer to the question is yes, I can. But I've only got a certain amount of allotted time in this presentation, so I'm honing in on something that can accommodate everyone. But if you want to be faster, then you can use this same methodology that I'm going to take you through to find the best trading plan for you. Everybody invests differently. We encourage that. We encourage that. And with that, that's why this is good to be used no matter what type of investor you are. All right? So we're going to, for our when to buy is going to be based off of the confirmed call. Our when to buy is going to be based off of the confirmed call. All right? Now, when we get into what to buy, now we're going to move to a different screen. Let me go to here. Nope, that's not what I want. Here. And then we're going to go to the unit search tool. All right, in the software, you have several different tabs. All right, in the software, we have several different tabs. And these tabs will migrate you through every and any part of the program. What we're going to deal with right now is the unit search tool. And this is what we like to call the most powerful search engine ever created. It can do a lot of things and hone in on exactly the types of stocks that you're looking for. Keep in mind that we track over 8,100 stocks. And if I need a means of being able to find specific types of stocks, the unit search is where I go to do that. So I'm going to do something real quick, and it's something that I like to call the anatomy of the search. I'm going to show you what the unit search tool will do for you. I need some input from you, though, so be prepared to type in answers. Any of you out there, what's the minimum dollar price you're willing to spend on a stock? The minimum dollar price. Joey's going to read off your answers, and I'm going to take an average of that minimum volume price, and I'm going to show you how to take this tool and find stocks. This is your what to buy now, and find stocks how you invest in the market. What's the minimum dollar amount you're willing to spend on a stock?
Dennis Sanchez just got here. Is this being recorded? Yes, it is.
Yes, Dennis, it is being recorded. All right, but my thing is, and if I don't hear something from you in a second, I'm going to put what I would think I want to put. You know, there it is. Somebody put something. $1,000 stock? No, all right, so what's the dollar... What's the lowest dollar price you're looking on a stock? I'm not going to say $1,000. 500, still no. All right, so let me explain what you... This is what I want. Date and time, I'm going to leave that alone. Under parameter, I have several things I can take and select. I'm going to put my mouse on stocks, all right, a stock parameter. And now I've got several other things that I can use. And I'm going to go over to price volume because I'm looking for at least a minimum dollar amount I'm willing to spend on a stock. And I'm going to go over down to price actual, the actual price of the stock I'm looking for it to be. So stock price actual. Operator, what do I want it to do? I want it to be greater than, all right, my minimum price that I'm willing to spend. And under value, I'm going to go to custom value. I'm going to create a custom value. And I'm going to type in the number 5. Does that make sense? So out of the search, out of the over 8,100 stocks we track, I'm looking for a stock of the stock's price to be greater than $5. All right? What's the next thing I need to add? I'm looking for volume. I want to make sure that I'm in liquid stocks. So I'm going to go down to the next blank line on the parameter, go to stocks, price volume. So anything that has parameters dealing with price and volume will be in this section right here. And I'm going to go down to average volume, which is a 50-day moving average volume of a stock's price. So over the last 50 days, the average price I'm looking under operator is going to go greater than, and under value, I'm going to type in under custom value 100,000 shares. Notice I didn't put any periods or any commas. So I'm looking for a stock's price to be greater than 5 and its average volume to be greater than 100,000 shares. I'm helping to ensure that I've got some liquidity. Now, I'm going to do something. This was the last date that we had the confirmed up call. That was on January 18th, right here. So I'm going to use that date. Now, notice that when I run this search, it's going to be stocks greater than 5, average volume greater than 100, automatically sorted by VST. That is our master indicator for ranking stocks. I'm going to run this search as of 1/18/2019. It's going to bring up some stocks. I'm only returning the top 10 stocks. Again, sorted by VST, but all of these stocks have a price greater than $5, as you can see here, and an average volume. Let's do this, auto fit. I have an average volume of greater than 100,000 shares. So I've got stocks that I'm willing to spend at least $5 on and that have a volume of greater than 100,000 shares. Now I take this and I'm going to introduce you to a tool called Quick Test. Quick Test tests from point A to point B, nothing more, nothing less. I'm going to do a quick test of these top 10 stocks and I'm going to use it up until right now. So right now, based upon these 10 stocks, looking at the price and volume of greater than 5, average volume greater than 100,000 shares, 10 stocks, I've got 5 winners, 5 losers. This strategy is down about 0.5%. Looking at all of the stocks here, down about 0.5%, where the market, where we look at the market as the VVC, is up almost 5.5%. So this basic search underperformed the market, but let's see if we can make it better, and that's in the power of the sort. Remember, we're sorting by our master indicator sorted descending. I'm going to click on that, and now an edit sort window is going to come up. I'm going to try to make this, even though it is just a typical search, I'm going to try to make it so that we can get more, that we can get better stocks. Yes?
Can you open that window up more? Can you drag it to
Oh, if I do that.
Not like that. Just the corner. Can you grab a corner and extend it? Attaboy. Thank you so much.
All right. So the sort is VST descending. I'm going to click the drop-down arrow box here, and you'll notice that there's a lot of sorts in here. So what does all of that mean? They're all mathematical equations. With a divider between them, that means VST divided by actual price. And with a divisor, you want a small number on the right and a big number on the left. When you multiply, you want a product. I want a good, strong number. But in order to be multiplied, they have to be on the same value level. VST and RS are both on the same scale between 0 and 2. VST, earnings per share. Actually, that doesn't have to be on the same scale. Growth, none of these are on the same scale. But how about VST times earnings growth rate times average volume? So that's a good, strong number when looking at stocks and ranking them that way. I'm going to change the rank to RT. So now I'm running the same search. Stocks greater than 5, average volume greater than 100,000. But now instead of sorting the stocks by VST, I'm going to sort them by RT, bringing the fastest moving stocks to the top of the list. I'm going to run the search. Same search, but now different stocks. The sort makes a difference. Let's do a quick test of the top 10. Big difference. So now we went from a losing basket of stocks to at least a winning basket of stocks, still not outperforming the market, but the sort makes a difference in no matter what search you make. I'm going to do it again.
Josh says using minimum of 5 means they would have missed BPTH this morning, which could have been bought at $3.
That's correct. But not only that, Joff, we're going back to 1/18 of 2019. I'm not streaming as of today. Keep that in mind. I'm not streaming as of today. What I'm going to do is in this portion of the 4-part series, I'm walking you through utilizing a search, but explaining how a search works. All right, so this is just called the anatomy of the search. Nothing more, nothing less, for all of the new people that are here understanding what they're looking at as far as a search is concerned and what the different variables of the search to make it better or worse. Does that make sense, Joff? So I'm not even talking about today yet, not even that. This is what a basic understanding of the anatomy of the search, all right? Let's change the sort one more time, RT times CI. CI is the comfort index, so I'm looking for stocks that are moving up in price that have the possibility of withstanding long and lengthy price declines. Once I do that, I click on Run Search again, watch the stocks. I click on Run Search again, different stocks. The sort makes a difference. Let's do a quick test of the top 10. Did that make it better? No, it's still winning. It's still making money, but didn't go better than the market. All right, so understanding what I'm doing is just to get a basic feel of how a search in the VectorVest software works. Many of you out there have never had that kind of instruction, which is why I thought that it was important to show here. All right, the search, the power of the search, but even more so than that, the power of the sort that makes a difference in a search. All right, now that you have an understanding of how the search works, remember we're using the confirm calls as our call. What I'm going to do is I'm looking at, for a nice middle of the road type of search, I'm going to have us look at prudent searches. All right, I'm going to go over the search is prudent, and there's a lot of searches in here. A prudent search is a strategy we call the best of both worlds. These are strategies to help you to make money without assuming a lot of risk. And that's the reason why I decided to go with search is prudent. I'm still looking at running these searches over the last confirmed up call to see how well they've done in the current market's condition. Now, why do I want to do that? The reason why I want to do that is because I want to see what strategies have had the propensity to do well now. If I just blindly pick a strategy, how do I know that it's got any kind of wherewithal, where's my mouse, that it's got any kind of wherewithal to keep moving forward? I don't. That's the reason why I'm going to do a quick test of some of these strategies from the last confirmed up call to see how well they've been working in the current market's condition. So there's 3 of them that I liked in particular, and 3 of them. How about the name Moneymaker? How about that as a strategy? All right, Moneymaker looks at, and look in the bottom right here, this search looks for buy-rated stocks with above average relative safety. Remember, the relative safety is an indicator of risk. Relative safety looks at the consistency and predictability of a company's financial performance. In short layman's terms, company that tend to meet or exceed earnings expectations, because those are companies that tend to move up. All right. The results are sorted to bring the stocks with the highest relative safety to the top of the list. So the search is looking for relative safety to be greater than 1. Any one of our indicators, which are cast on a scale between 0 and 2, above 1 is favorable. So I'm looking for favorable relative safety, average volume to be greater than 100,000 shares, and this is key. The stocks can only be a buy recommendation. You know what that does for me? In a downtrending market, when stocks are not a buy, this search will not return very many stocks. How cool is that? So in a good uptrending market, it's only looking for stocks that are a buy recommendation, and the sort is sorted so that the stocks that have the highest safety factor are at the top of the list sorted down. If I run the search as of that update in January or January 18th, here are the stocks that are returned. Okay, good stocks. Now let's do a quick test of the top 10. Let's see what it did. 0.95%, where the market was up 5.48%. All right, as a matter of fact, I'm going to change this because I did this as of yesterday. So I'm going to do that. Run the test again. There we go. Actually down from 118 up until yesterday's date. All right, so even though I like the strategy, it didn't make a lot of money. All right, so that's a strategy that I know should make money, but in the most current market condition did not. That's all right. I'm going to go run another one. Another one called ruler stocks, a great strategy, a great prudent strategy. Looking down below, sales growth of this stock, earnings growth rate of the stock up 14%, greater than or equal to 14%. These companies are growing their earnings by 14%. Relative safety, nice high number, greater than 1.4. Actual price, greater than $1. Average volume, greater than 100,000 shares. These other three things that you will see on the majority of all of our strategies make it what we call derby ready. So we're not looking at ETF shorts. We're not looking at certain exchanges. And we don't want to look at the watch list of contra ETFs. All right? But the crux of this search, earnings growth rate greater than 14%, relative safety greater than 1.4, actual price greater than $1, and the average volume greater than 100,000 shares. But look at the sort, RS times earnings growth rate. Good, safe stocks times good stocks making money on a yearly basis. All right? Let's run this search as of our start date where we got a confirmed up call. Here's the stocks that were returned. Let's do a quick test of the top 10. Hey now, 8.78%. Now, this strategy has 7 winners, 3 losers. All right, 70% of the stocks made money. That's a good number. That's a good number that's outperforming the market and a good percentage of winners in that system. 7 out of the 10. How about 4 of them are double-digit winners? 3 stocks not making money, but you know something? In the long run, if I'm looking at this as a prudent situation, these stocks are not down a ton where I'm not losing. I'm gonna get ready to close it anyway. I'll do it on the next one.
I want to see if it makes it bigger, if it's even worth doing.
All right. So now let's go one more search, and the reason why I only picked 3 is because of the time constraint I was under, and I've been here long enough that these are 3 good strategies that I know should work well for what we're trying to do. The last one is turnaround candidates. Let's talk about that. Find stocks with well above average safety. Notice that safety is a key factor in all of these searches. Makes you think about something, right? Safety is a key factor in all of these. Well above average price appreciation, which is RV. Stock's ability to long-term price appreciation potential. But have below average RT. So RT is low. So let me explain that. Relative safety greater than 1.25 on a scale between 0 and 2. So it's up, it's favorable. A good strong number is an indicator of risk, not a risky stock. Relative timing, though, is below 1 because this becomes a little bit more of a bottom fishing type of scenario. Not quite, but maybe. I'm willing to take stocks that are not moving up above 1 right now because I'm looking for stocks that are good stocks. So normally in a bottom fishing scenario, you're looking for good stocks that have been beaten up. Well, if RT is below 1, the stock has been beaten up. RV is above 1, just like RS is. So the stocks fundamentally are sound. Good safety, good upside potential, just have been beaten up. So it's sort of like a bottom fishing, but look at the name, turnaround candidates. That gives you a better feel of why it's called turnaround candidates. Good, safe stocks that have been beaten up. In a good uptrending market, these are stocks that will turn around. How about that? All right, price actual greater than $1, average volume greater than 100,000 shares. And again, these last 3 are all entailed in stocks that strategies to make them derby ready. Sorted by our master indicator, VST. All right, let's run that search. All right, quick test the top 10. Hey, 7.84%. So guess what? It didn't make as much money as the other one, which was up a little bit over 8%. But you know why I like this? Because 9 out of the 10 stocks made money. So not only am I looking for strategies that in a certain time period can outperform the market, but how about the efficacy of the strategy in the same time period? 9 out of the 10 stocks made money here, whereas with ruler stocks, 7 out of the 10 stocks made money, but it made almost 9%. So in this case, I'd rather take the strategy in this quick test scenario. I'd rather take the strategy that had more winners. Why? Because going forward, the chances are, just like Johnny Mathis, the chances are I have a higher probability to make money. Hopefully that makes sense. And the whole idea is I can go through and test all of these. Let's go to best of the biggies. Let's double click, test it. Made 3.7%. Notice that all I'm doing is I'm trying to find stocks that outperform the market, 2.49%. So instead of us having to do that, I already did it for us to find the strategies that were already making more than the market. So, but normally what you would do is go through and find the stocks or find the strategies that are outperforming the market. That's just a general process that you do, 3.12%. So now you know that the strategies that I've picked, I've already gone through this process of seeing in that prudent folder which strategies outperform the market since that 1/18/2019 time frame. Anybody say anything, Joey? All right. So either I'm confusing the hell out of everybody or you're understanding. All right. Either or, if you're not understanding, this is why we have these live streams. Ask your questions. All right. Don't be afraid to ask the questions because I don't want to leave anybody behind. Remember, folks, this is all going to tie into planning your trades and trading your plan. This is just a step-by-step approach on how to get to the right position or get to the right ending result that you're looking for. All right? So the strategy that I picked out, as you just saw by way of the quick test, was turnaround candidates because on the quick test, it had 9 out of the 10 stocks make money. So that's the strategy that we're going to take. All right? Now that we've gone through the process of finding out what to buy, now let's set up a back test in regards to teaching us and molding our when to sell. All right, we're going to go to the back tester. All right, man, there's a lot of stuff that you're learning right now, but at least it's step by step to show you what to do and how to get to the right end result. If I want to look at more information about how to use the back tester, we have videos. All right, if you click on it, I have an introduction to the back test, using the auto timer, and if you needed to do a manual back test. So you have resources here to help you better understand the back test. What we're going to do is go down the back test and idea. I'm going to click on that, and it's going to set up a wizard, and this wizard makes it so you can't jack up nothing. All right, first thing I'm going to call this is live stream. I can't spell stream. Stream test. I hope it's not this slow when I do the test. All right, live stream test. And I'm going to go down to build a custom trading system. All right. The initial investment is automatically going to be set up for a $100,000 portfolio. Commission is going to be $4.95 per trade, and we're not going to use margin. If I want to change any of this, I can go to Edit Account Settings. And from here, I can change to reflect the amount of money that I'm actually trading in the market. If I have different commissions, I can put that here. If I want to use margin or account for interest, keep that there. We're going to execute our buys and sells in this portfolio at the next day's open. And we're going to execute the test in a daily pricing mode. But we can also do a test, take out all of the weekly noise, put it on a weekly pricing mode so that it will only trigger on a weekly basis, not on a daily basis. All right? So now, there's a couple of questions. Hold on. Here they come. Let's see. While confused about many things, your explanations allow understanding of what you have explained. Thank you, Joff. Devin says, I've got the mobile app only. None of these strategies can be done on the phone, right? The answer is to right now, the answer to that is no. You can't. We have specific strategies as far as I know. But Devin, let me give get you a better answer in the next presentation that I give to you, because I know we've done some updates to the mobile app. And before honestly say no. Let me confirm that. I know we've done some updates, so let me confirm that. All right? So based upon that, let's click on OK. Now we're going to go down to build a custom trading system. And this is where the fun happens. All right, so what's the when to buy? We're going to use the confirm calls. The cool thing about this when you're looking at the portfolios is that it breaks down what everything is used. Let me see if I can move that up a little bit. How the calls get to be a call. So it breaks down how they work. So that's our market timing. We're using confirm calls. On the automation rules long or up, what strategy did we say we were going to use? It was found in search is prudent, and the strategy was going to be turnaround candidates right there. I click on it, and now, do I want to use any stop criteria yet? No, and I don't want to use more settings. Right now, this is called a base test. I want to do a test over the last year using several up and down calls, which you're going to see in a second. I only did the quick test over the last up call. But now when it's taken a step further, and now I want to look back over the last year on several different up and down calls, how consistently did the strategy work? All right, that makes sense, right? Remember, everything piggybacks off of everything else. We started to look through the strategies, number one, and then number two, since we found our strategy, let's do our first test, which is going to be a base test from over the last year. All right, so I don't want to put any stop criteria yet. And on the rules down, what do I want to do? In this case, I want to go to cash. So when I get a confirmed down call, the portfolio is going to go to cash. All right, let's click on finish. And I got live stream test, and I'm going to put live stream. I'm going to put turn around candidates, TAC, base. Base, how low can you go? Death row, what a brother knows. Once again, back is the incredible. Never mind. That was a little bit of Public Enemy, in case you didn't know. Maybe, maybe not. But live stream, turnaround candidates, base. Base test means it's just running it. Let's click on finish and run. Notice how the wizard makes it so that you can't make a mistake. Once I'm ready, click on finish and run. It's going to run the test for you. On the bottom, notice that the up and down arrows denote bullish and bearish or confirmed up and confirmed down. Notice that the portfolio at some point in time was in the underground, right? Excuse me. It was in the red, but this is why you turn around and say, plan your trades, trade your plan. The strategy finished up now 12.7% with a max drawdown of 4.37. The max drawdown shows you how much money you lost in your portfolio while it was running before it turned back up. To make 12.7 in 1 year's time period, all right, notice that I am running this for 1 year, back from March of 2018 to 2/28 of 2019, 1 year, several different calls. We liked it in the last confirmed up call, but now we're putting it through more of a robust test to see how consistent it was and in going up and going down. Notice that in a down call, we go to cash. The portfolio sat in cash all through that October, November where everybody was losing their mind. This strategy said, on the downside, we're just going to sit here and wait and look at the last confirmed up call when the market just went up. Beautiful up call. 12.79%. Now, the beautiful thing about this is let's see if we can make it better. And that's what this whole back testing process is about. To take this data that you've got right now and see if you can make it better so that the next time you get a confirmed up call, how comfortable are you going to be taking this strategy now that you've determined when to buy, what to buy, when to sell? We haven't done that all yet. We just took a quick test and took that quick test and now put it on a 1 year test. We still like it. Now let's tweak it a little bit. I'm going to strike a copy of this so I don't have to build it all over again. I'll click on copy. And now let's see, make some changes. I'm going to go down to customize trading system. On the confirmed up, we're still going to use turnaround candidates. But now let's start to put some stop criteria. Money management. Notice that test of the base, we didn't use any money management. We bought stocks and held until the confirmed down call. On the next confirmed up call, we bought stocks and held, and we're going to hold them until the confirmed down call. But no money management, no stops. New people, stops are going to tell you when it's okay to get out of a stock to take profits or mitigate losses. So now let's incorporate some money management or some stops. Notice when I click on stop criteria, there's a myriad of different stop criteria that can be used. I'm going to start off with a generic stop criteria of, oh, no, better yet, back up. Let me back up a second. All right, because many of you are probably going to say, well, why did you just use the confirmed calls and leave that alone? Let me explain to you why I'm staying with the confirmed down calls. I'm going to strike or copy. What was the other strategy that we used? And I'm going to use, this one is going to be, that was for turnaround candidates. The other one that I used was Moneymaker. Moneymaker. All right. Let's go see finish and run. Oops, not yet. Change that. Oh, sorry. Let me back that up again. Gosh darn it, Glenn. Why did I use the confirm call? Because I already know that it works. But let me show you what you would have done. So let me back up again. I'm going to still strike a copy of this. Okay? But let's try it on a different timing signal. Let's go to customize. Instead of using the confirm calls, let's go to the DEW. All right? Everything else is going to still stay the same. But now I'm going to go DEW, base. Does everybody understand what I just did? All right, so I'm using the turnaround candidates, but you don't know why I stuck with just confirmed calls. I'm going to go click on finish and run. I'm running the same turnaround candidates base, but now using the DEW call. All right? Let's go see how that works. Still looking at from 2/28/2018 to 2/28/2019. 1 year, here's the confirmed up and down calls. All right, this strategy is not doing nearly as well on the DEW timing call. All right, holy smokes, didn't look good at all. Down 12% with a max drawdown of 21%. Man, same strategy, different timing. Let's strike a copy. Let's do it one more time. Base, but with the green light buyer. Let's try with the green light buyer. All right, trading system, GLB for the green light buyer. And let's just try those three. So the same strategy, I like the strategy, but now let's make sure that we're using the right timing before we go forward with what we're doing. Does that make sense? All right, so we've already determined that we like turnaround candidates. Now we have to determine which timing is better used in this 1 year time period. So we're going to run this last. So we're only going to use the top three there. And the reason why I'm only using those three, again, I've only got about an hour's worth of time to do this. So I'm going to use three of the most popular timing signals. And how about the GLB is down negative right now? Look at that drawdown. We're watching it live. Look at all of the green. Those are up bars. And then all of the red, those are confirmed down calls. And look at that, man, just running and running and running, ripping and running, ripping and running, ripping and running.
Can you drag that up?
Drag what up? Drag this up? Yeah.
There we go. Yeah, that looks a lot better.
All right. So that's the third timing signal, and man, did it not make money. Woo! All right, so the same strategy. So now I'm honing in on which is the best timing signal to continue my test. And in this case, I'm going to stop this. In this case, we now know it's the confirmed calls. The confirmed calls have done the best. All right, a lot of with that green light buyer, a lot more trading going on. Definitely, same time period, the confirmed calls did the best. All right, so that's part of the testing process. Now, I can take that I like, the confirmed calls, all right, and now let's make a copy of it, all right, because that was the best timing signal that worked out. So let's go TAC base and let's customize the trading system. Rules up. Let's start using some stop criteria. I'm going to use a basic stop criteria of a 30% gain and a 5% loss. Let's try that. 30% gain, 5% loss. Right there, 30 gain loss. And we're going to put, if we get 30% on the stock, we're going to get out. But I'm not going to let a stock go against me more than 5%. Okay? Let's click on next. Let's click on finish. And let's turn around candidates. And I'm going to put 35. 35. So I'll know what I'm doing in that test. Finish and run. Let's see if that makes it any better. All right, so I'm still using the confirm call on TAC, which is turnaround candidates. But now I'm using a 30% gain, 5% loss. Any stock that hits 30%, I get out. Any stock that goes down against me, 5%, I get out. Make what any better? These? There, yeah. No. But I can make the test look bigger. So 30% gain, 5% loss, stayed underwater a lot, finally made some money. Look at that, went to cash. Last confirmed up call, woo, it ran. It made 9.25%. Did that do better than the base? The answer to that is no. And it was a lot more volatile, but man, at the end, it really started rocking. Would you have been happy to have made money? Yes. Actually, the drawdown wasn't nearly as bad as I thought it should have been with all of this being underwater. That's not a bad way to go, but did it beat out the base where we had no stops? The answer to that is no. All right, so now let me talk to you about a more automated timing, a more automated stop criteria that you can only find in the VectorVest software. I'm going to strike a copy of the base. Let's click on copy. And this one is going to use Profit Locker 28.7. Let's customize it. Let's make that change here. Stop criteria, Profit Locker 28.7. And it tells you how this works. This is an intelligent stop that locks in profits by adjusting itself to the action of the price and the inputs you select. Set the target price to reflect your profit objective. Set the stop percentage to reflect your maximum risk. It does all of the calculations for you, and it gives you a visual picture. As the stock starts moving, as it gets closer to your profit target, notice how your stop starts squinching in closer to the stock's price. Once you hit your profit target of 28%, this now becomes a 1% trailing stop. And just like its name says, it locks in profits for you. All right, I'm going to click on one other thing. More settings. Instead of, oh, okay. All right. Yeah, okay. All right, so customize the trading system. Let's do that again. Profit Locker 28.7, more settings. Instead of using 10 stocks, let's try it with 5 stocks. So I'm doing a lot of different things to help to tweak this, right? Let's click on finish. So I'm still looking at turnaround candidates with a Profit Locker of 28.7, still using the confirm call, okay? Go finish and run. Let's take a look, see what it does. All right, turnaround candidates, Profit Locker 28.7. Let's see if it does better. Look at that, stayed underwater, but jumped up, oh, went back underwater. I like that you can watch this as it's happening in the back test. And again, the green up arrows are confirmed ups. The red down arrows are confirmed downs. All right, look, it went into cash, jumped up. Hey, so did we do better than the base test? A little bit, yeah, we did. We got up to 13.45%. The drawdown was a little bit more. This is the beauty behind doing this testing. I can see, yeah, it made a little bit more money, but I had to risk some more money going down. These are the little things that help to solidify the plan that you're going to use. All right? So I like that. How about this one used a little bit more total commissions. All right, little things. You annualized out to 13%. That's not bad on an annualized basis. Now I'm going to show you the home run. All right, I'm going to strike a copy of this. All right, live stream, turnaround candidates. Now I'm going to use something called the Profit Locker Pro. It's a new tool. Ooh, Profit Locker Pro. It's a new tool, new to the VectorVest software, which takes the Profit Locker to another level, which you're going to learn about in a second. All right, let's go customize the trading system. Still using the confirmed calls. Still on the confirmed up call using turnaround candidates. Let's now change the stop. The stop now is going to go from Profit Locker to Profit Locker Pro. Now, because I am prudent, I can now do a variation on this prudent stop and use something called Prudent Enhanced. Whew. The Prudent Enhanced Portfolio Profit Locker Pro stop is a prudent stop which give high returns with lower drawdowns. Who wouldn't want that, right? It begins with a 10% trailing stop until your investment reaches a 5% gain. From there, it loosens until your investment reaches a 10% gain, and then tightens towards the profit target of 50%. At the profit target, a 5% trail is used until the trade is closed. That is a beautiful explanation of what this trade or what this stop is all about. All right? More settings. We're going to leave it at 5. And let's click on Finish. Profit Locker Pro. And let's go Prudent Enhanced. All right? Same everything. But now let's go see if that stop can do a little better. We'll run it. It dropped. It ran. Look at that runation. That's a Glenism. And then it pulled back. High drawdown. All right, not high. Anything less than 10% for me is a good drawdown. Nice. And look at that. 21%. All right, annualize out to 21%. Look how low the commissions are. I didn't have to spend a lot of money to make a lot of money as far as commissions. I didn't have to get in and out nearly as much. It helps to limit how much I'm trading by having that Profit Locker Pro stop involved. I like that the drawdown was low. It's still higher than the base, but that makes sense. The base pretty much was just buying and holding through each signal. Adding some stop criteria, bumping up to almost 8% drawdown, still not bad. Look at the equity curve. Overall, we were underwater for a little bit, but look at that run. Now, going forward, when I'm ready, when the market is ready to continue to move higher, right now we're at a toppy level, but watch this. When the market, if the market falls, right now, let's take this, right click, and now I can convert to a portfolio. Watch this. So now I like the trading system, and now I want to paper trading now as the market is going along. Convert it to a portfolio. It now names it automatically, live stream, turnaround candidates, Profit Locker Pro, Prudent Enhanced conversion. Start with an empty portfolio. Start with the Portfolio Genius on. I want to check my stops throughout the day. Click on OK. Open the portfolio now. Now I'm paper trading. Look at that. It's going to put my stocks in there. There's my 5 stocks. And now I'm paper trading. Now I've taken you through the process of understanding when to buy, what to buy, when to sell on the upside only. We went through the process of looking through the type of investor you are. In this case, I use prudent off the bat. If I'm more aggressive, I can do the same thing. Let's do that real quick. So I'm going to let that run. I still got a few minutes. Watch this. If I'm more aggressive, let's go to search as aggressive. What else do I need? I need an aggressive timing signal, right? Oops, hold on. Let me go back to, I need an aggressive timing signal, right? So let's go back to the graphs. What's an aggressive timing signal? That would be the primary wave. Primary wave was up from 1228 to 128. All right, 1228 to 128. Actually, let's use the most recent one. The most recent one was on, dagnabbit. The most recent one was on 2/12 of 2019. right? All right, let's do that. Let's go back to the unit search. Is that here? Go back to the unit search. All right, and let's go 12. What did I just say? Dagnabbit. Unit search.
21.
No, you wasn't listening. You never listen to me. You don't send me flowers anymore. 212 to current. 212 to current. That's the most recent primary wave up. 212 to current. All right, let's go back to the unit search. Which one? Is it this one? Yeah. 212 to current, right, right, Joey? Mm-hmm. All right. There we go. Let's go to 212. So this is for the more aggressive person. 212. And let's go through the same process. Start with aggressive rebounders. Let's run it. Do a quick test top 10. 0.34%. Oh, don't want that one really. Let's go see if we can find one better. Quick test the top 10. 2.31, maybe. Aggressive stocks. Quick test. 0.46. So right now it's aggressive small fry. Best below 20. Quick test. Now I got best stocks below 20. But look at this. 5 winners, 5 losers. But it's got the biggest gain compared to the market. So I write that down. Bottle Rockets. Quick test top 10, 3.4. But now this has got 6 winners and 4 losers. Maybe I keep Bottle Rockets in mind. High Flyers, quick test. 4.91. How about 9 winners, 1 loser? Oh, that's even better. All right, so now High Flyers. Go to the next one, Ka-ching. China stocks have been moving, right? And 10.36, 9 winners. There you go. China stocks. All right, now I take that one. Party Animals, quick test top 10. Nope. Traders Alert, quick test top 10. 5.43. So now the strategy that I like the best out of the aggressive is Ka-ching, Ka-ching China. Why? 10.36% where the market is only up 1. Blowing the market out of the water. 9 stocks made money. Only 1 lost money. And then I would go through the process of testing it over the last year. So no matter what type of investor you are, the understanding of what I've given you based on knowing when to buy, knowing what to buy, now knowing what to sell, setting up your back tester, running through some tests, now we know what we're doing. And now let's go back to the portfolio. I had it up here. Portfolio. This portfolio is down about 0.1%. But how about I go to the ROI column and I only start to cherry pick the stocks to start making money? How cool is that? So I'm still using the trading system of knowing when to buy, what to buy, when to sell. But now I'm using the power of the paper trading portfolio to pinpoint which ones I want to cherry pick. How cool is that? All right, and that puts me right at where I need to be. I walked you through the whole understanding of how to know when to buy or put together a trading system long only. And next week, we're going to take this same system and try to add a bearish side of it, so that when we're looking at the back test, maybe we don't have to sit in cash. Let's see if we can make some money on these times when we go to cash. So I'll walk through the same process of instituting a bearish side as well. Anybody got any questions? I know I threw a lot of stuff at you, but does anybody have any questions? That was step-by-step, folks, on understanding how to set up a trading plan to the upside, even understanding how a search works, how the sort can be the most important part of the search. Looking at taking that search that we ran, looking at which was the best timing signal. We saw the confirmed calls was. And then from there, analyzing the tests, how well they did, what was the drawdown, those kinds of things. All right, so I don't think that you can get any more of a more rounded understanding on how to do that than what you just got here. One of your better presentations displaying the power of VectorVest. Thank you very much for that, Joff. All right, so there we go. Thank you, Dennis. Dennis says, well done. And again, we didn't get a lot of people chatting, and it is what it is. But as long as you learn something, that's the most important thing. And if you truly walked away in regards to what we just showed you here, then it's all well worth it. Two ends, you're on fire today. Thank you, Mark. Glenn with two ends, you're on fire today. There you go. So that's the beautiful thing about being in these live sessions. You can ask questions, number one. And number two, you're learning. All right? And again, I think that in and of itself is a beautiful thing. Plan your trades. You're getting a better understanding of why it's important to plan your trades. You're getting a better perspective on knowing how to manage a trade once you're in it. Those stops are key. And don't jump the gun if you get nervous. Nervous is an emotion. The stops take out the emotion. Let the stops do the work. Please post to your channel. Yes, this will be posted, Kevin. This will be posted. So you guys can go back and watch this over and over again and walk through the process that I just showed you. That's the reason why I took the opportunity to go through the more aggressive side. Go through that same process. If you're aggressive, if you're prudent, even if you're conservative. I used a conservative call with a prudent strategy. Why? Because the prudent call did not work with that prudent strategy. It doesn't always work out that way, but that's part of your testing. That's why we used a confirmed call, even though it was a prudent strategy. Hopefully everybody understands that. I tested it with the DEW. I tested it with a more aggressive, the green light buyer. I could have tested it with the primary wave, but I didn't want to. All right, it was more of a prudent, so the aggressive to a prudent type of what I was looking for was right in line. But it helped to solidify what was the best timing to use for that strategy, and that was the reason why I took that same strategy and used it over 3 different timings. Once I solidified the timing, then we honed in on the money management. Money management is all about taking emotion out of the game. You've got to have the discipline to not only choose your money management, but you've got to stick with it. And just because somebody on TV opens their mouth and starts yapping their trap, so what? Let them. Because you start getting nervous because the market's going down one day. One day doesn't make a trend. But the market's going down one day, you get nervous and say, I need to pull out of them. Let the trade the plan your trade, trade the plan. If your stops are not hit, don't let the outside influences make you go crazy. You notice that all of those portfolios were automated. All of those back tests were automated. Keeps me hands off. It'll let me know when it's time to close a position. That's when you close it. It'll let you know when it's time to buy a new position and tell you what new position to buy. Let the trading system do it. That is the full composition of planning your trades and trading your plan. Never lose sight of the second part. Trade the plan. Stop letting outside influences put your heads like this. Stop it. Let the trading plan. And that's why we go through the process. You know something? I'll move this back over. You know something? Let's go back to that portfolio. Is it starting to move yet? Nope. Well, you know why? What's going on in the market today? The market's pulling back. That makes sense. The market is starting to pull back today. But now, you know, that I have this in a portfolio, when the time is right, I look at this ROI, return on investment, and I start only cherry picking the stocks that go green. You can't go wrong doing that, right? Think about that. So not only did you get the system set up, now before you put your real money into it, use this paper trading tool and only cherry pick the ones that are moving up. There you go. All right, with that, if you have any questions, ask, let's go see. And I want everybody to answer this. Does this mini-series help you to better, put you in a better profitable position trading in the market? Answer that question, yes or no. And if it's no, you put no, I don't care. I just want some people to answer. Does this mini-series help you to be more profitable in the market? Yes or no? All right? And honestly, if you've got to know for whatever the reasons, if you say you don't think so, put it in the room. I'm okay with that. I am okay with that. I'm looking for honest answers. All right? I'm only looking for honest answers. If you enjoyed the stream, give us a thumbs up. If you enjoyed the stream, give us a thumbs up. All right? And we want you to hit the subscribe button as well. I see the yeses coming in. Ray says yes. Dennis, Ray in Spanish is king, just in case you didn't know. Let's go see. Dennis said yes. Mark says yes. Jeff says trade the plan even if the market goes to heck. The plan will take care of you. He's right in that. He's ready. He's right in that. This presentation, well done. Dilly dilly. Dilly dilly to you, my friend. See you. That's right. I'll be doing another presentation on Twitch in about an hour. All right. Texas Pete says, can you do a search of searches? Thank you, Jake, for the thumbs up. Thank you, Ray, for the thumbs up. Can you do a search? I'm not sure what you're asking. Thank you, Kim, for the thumbs up. That means you guys are even sitting in the background. I appreciate that. If you enjoy what you're seeing, keep coming back and make sure you hit the subscribe button.
Maybe he wants to do a stream of searches.
Can you do a what? A search?
Maybe he wants to see a stream of searches.
What do you mean?
Like, let us go through the searches for him.
I don't know. I don't know what he's asking. All of the searches are found in the Unisearch tool. All right, there's a lot of different characteristics of searches. Right now, I'm going to say stick with the type of search that fits your investment style. So whether you're aggressive, whether you're conservative, whether you're prudent, or even if you are speculative. A lot of these other searches can help you.
Search of Derby searches.
Can you do a search? Yeah, I got to have the Derby, though. I have to have the Derby in order to do Derby searches. And actually, how does this not have Derby? That's weird, because we do the Derby in this same account, don't we? Somebody needs to talk to somebody on the product support floor because we need Derby in here. All right. The Derby searches can only be used from the Derby, but the answer to that is yes, you can, as long as you have Derby. All right? As long as you have Derby. I can show you which Derby searches are making the most.
Ray says, when is the next session?
The next session is going to be part 4 of the 4. Will be next Friday at 12, where we will finish up. And in that one, we're going to take this same long strategy that looks good, and we're going to try to throw in a bearish side to even make it better. So then you know something? You'll be completely surrounded by what to do, when to do it. You're going to know when to buy, what to buy, and when to sell, no matter what the market's conditions are. How cool is that? So for free, folks, you're getting hands-on understanding on how to put together a full-blown trading system, both to the upside and to the downside. So don't miss next week. Don't miss next week.
Oss says, can we customize it? I think he's talking about the searches.
Customize it, yeah. So remember in the beginning, I started out with my own search. Remember I created my own search, right? I can make whatever I want. Price volume, let's go price actual. Let's say you got a lot more money in the bank, in the market. Let's go to $50. And if that's the case, stocks, price volume, average volume, let's go greater than or equal to 500,000. So now, out of the 8,100 stocks we have in the market, I'm looking at the top 10 sorted by VST that have a price greater than $50 with an average volume greater than 500,000. Average volume greater than 500,000. So I can make whatever search you want, Moss, any search you want, pretty much. If I want to look at stocks that are safe, let's go capital appreciation, relative safety, greater than or equal to 1.25. Still looking at stocks greater than 50, average volume greater than 500. Now these are safe stocks. Boom, different stocks. Let's say that I want to make sure that the stock is rising in price, rising in momentum. RT, I got an indicator called trending. Trending higher for the last 3 days. Whoo! Stocks greater than 50, 500,000 shares traded. Safe stocks, RT is trending higher. So these stocks, RTs are above 1. These stocks are in an uptrend. So does that answer your question of what you're looking for? I can customize a search to whatever you want it to do. Again, that is the flexibility of the software. This is the first time we've really introduced the Unisearch tool to you, but that's exactly what I watched 4 of your videos, but just downloaded the software. Can't answer yet. Kevin. All right, that's fine, I think. So, Emos, did you see did you get the answer you wanted about customizing the search? Hopefully you did. I can make whatever you want. Whatever makes your what? You trying to tell me to hurry up? Wow. Man, Joey's told me to hurry up. All right. Well,
hurry up. I should wrap it up.
No, Joey's told me to hurry up. He's not being nice today.
Yeah, we got another one.
I know I got another. Who's doing it? I'm doing it. I know it. Search of a search. Is search of a search. I don't know what a search of a search is.
He was.
What?
He was saying derby searches, and then he was questioning too. He didn't know what he was saying either.
All right, that's fine. Anyway, Joey's not being nice to me. I'm not talking to you anymore. I'm not talking to you anymore. Joey is in timeout. Joey is in timeout. Thank you, folks, for being here. I appreciate you guys taking the time out of your day. As you can see, we've had YouTube content out there for a while, but now it's becoming a lot fresher. Continue to come. Continue to come. It's only going to get better. All right? The YouTube content is only going to get better. This is just the start, the tip of the iceberg. We're going to make it rock and roll, folks. Thank you for the thumbs up. I appreciate that. Have a wonderful day. Have a great weekend, everybody. Be safe out there. We'll see you next Friday as far as YouTube is concerned. But we are also doing Twitch in about 40 some odd minutes. So we have another live stream as well. Adios, arrivederci, ciao. Au revoir, sayonara. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.